Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, June 9th, and we are finishing yet another week in the market, first full week of June. And plenty of interesting news throughout the week and plenty of interesting news next week as well. So we're obviously looking at DXY right now, which is finding a little bit of support around the 103.3 level. I think if we break through this level, then, probably headed straight for that 102.5, 102.4 level. And obviously, if we can get back above this 103.6 level, probably end up taking out these areas. So this hasn't been entirely impactful for the risk market, but, any steep moves, meaning, anything that looks like this or something like this. Oh, sorry, that was an ugly circle. Something like this is probably going to end up, negatively affecting price action, at least in the short term. So something to keep watch for there, but DXY not the most important asset, but also, just the way that we typically will look at, just drawing some lines, making some patterns, kind of looks a bit like a descending wedge. Typically, this will bounce up kind of like that. So something to just keep in mind, but I'm not entirely too worried about DXY unless I see a really steep spike. In that case, it'll probably instill some fear in me or euphoria if that spike is lower. So moving over to equities, and just before we dig into price action, let's preface what we have coming next week. So we have the FOMC. Well, we have CPI on Tuesday, we have PPI on Wednesday, and then at the end of the day, Wednesday, remember CPI and PPI always print in the morning around 8:30 Eastern. And then on Wednesday, we have FOMC, which is expected to be a pause, and something we've been talking about on the B3 radio show, on Trading Rebellion show, and now this show is, right now, a lot of the indication is a hawkish pause, meaning that the pause will be, taken bearishly by the market. And it kind of makes sense, just from a pure technical perspective. If you're looking at the long-term trading, and let me go ahead and just get rid of these lines just to make it a little bit more clear for you, but we'll go over those in a second. This is we're pretty much at the equal high as the August highs, and I mean, can barely even remember what the heck happened during life at this point, but we are very much even with these highs, and we've talked about trading at even highs, and typically you do see a sell-off, especially after you get a potential, doji candle like this one. So I'll zoom in a little bit, not the best doji in the world, but certainly not confidence inducing, and then followed by a sell-off. So something we'll have to look out for here. This is looking a little bit similar to the other candle. Looks very, very similar to this candle up here. So something that, I would encourage you to check this out on your own chart as well. But if you are a bear, this is certainly where you would want to start filling shorts, especially with this kind of rejection off of that level. Doesn't mean it will, certainly occur, but, a lot of times when we meet equal highs, we sell off to some degree, even if we end up, taking out those highs yet again later. So very much something to consider there, especially with the context of two inflation prints, early next week, as well as FOMC mid next week. So let's go ahead and zoom in on the 1 hour. And what we can see is, price zoomed up pretty much the open, got rejected right here. And now we're back, of course, to support, which lines up with each of these previous highs. So what bulls want equities to do is obviously hold this level, bounce around here, and then maybe zoom up, maybe form a bull flag, and then move higher. And bears want us to slowly creep down back to the VWAP, maybe retest this level right here, and then end up slipping lower, which would be basically a large deviation above the current range. Tag that that high, so we are, didn't get the full sweep, but kind of close enough. And then obviously start, moseying back down towards the 4260 level and possibly lower. So no real indication yet, but I do understand why bears are filling shorts. And if you did get shorts filled up here this morning, you're obviously feeling pretty content and safe right now because you can just move your stops, set it right here, and then just sit in your shorts and basically have no risk whatsoever to the downside. So, and if you are attempting to long, then what you'd want to do is long around this area with targets back up here or potentially higher. So no clear read yet. I do think you need to wait for some more price action to fill in. And of course, this is a Friday, so there's only several more hours left. How many? We have 1, 2, 3, 4, about, a little over 4 hours left in today's trading session. So not too much longer to be placing bets on equities, but where equities close may signal good or bad for crypto. So if this does, maybe we drop one more and then we get a strong, kind of engulfing candle up towards these highs, maybe that's a good signal for crypto, but it's probably a good signal for equities, at least heading into next week. So monitor this. Breaking lower, bad. Staying above this level and trying to reattack the highs in the near term is good. But again, if you did short up here, you're sitting pretty. And, there's an understanding of why you would, based on this previous price action. So we'll have to see how this plays out. But I would not be, unless you're stacking shorts right here, I definitely would not be stacking longs until you see a little bit more buy through or buy back after this steep, ugly hourly candle. So I will say, plenty of times it has done this, but, again, we're going into the weekend. Therefore, if you're placing bets, expecting what's going to happen on Monday, you might as well just kind of wait for the Sunday futures open to see how things react after crypto over the weekend. So looking at Bitcoin, we're talking about this a lot. We talked about this yesterday on Trading Rebellion. My number has in line in the sand is 26.5, just to kind of give some context for those who may not have seen the show. Let's go ahead and get this, a little bit normalized. We'll zoom up here. That's very odd. And so, okay, so 26.5. We have deviation here, moved higher. Deviation here, moved higher. Deviation here barely broke above the 1 hour estimated 200 moving average. So that definitely indicates that this is a weaker signal, and we indicated that to the TTC community. But still the moral of the story is 26.5 is support, and if we do confirm deviation, meaning if we do something like this, then I'm definitely, I'm trading that acceptance above the 1 hour estimated 200 moving average, certainly. But, what we told the TTC community today, hold above 26.5, maybe you get up to this 1 hour estimated or 4 hour estimated 200 moving average, lose the VWAP, probably at least, grab these lows right here, lose these lows, probably start trading down near these lows right here. So I'm gonna go ahead and get rid of a lot of these lines because I think it's pretty obvious what we're dealing with here. But what I want to see is very similar to this. I want to see price get above these local highs that we traded underneath, pretty much all day Thursday and obviously this morning. And then I want to see us trade back up to these highs and retake the 4 hour estimated 200 moving average and move back up to this high end of the range. Like that completes the deviation. Now that, of course, life doesn't have to work the way I want it to, but that is the ideal trade. So if we can get above 26.8, I'm longing up to 27.3, maybe cutting a little bit, adding if we can hold 27.1, and then cutting at 28, maybe 28.3. That's the ideal setup. But, and I'll go ahead and remove these lines just to make it easier because I think we understand that. I'll go ahead and draw a fresh line for you. Grab this up here. Like that is the price action that I want to see. But if we fail, if we lose the VWAP, something like this, then we're probably at least going to grab this first. Maybe we drop straight through, but could also see, grab a little bit of a buyback and then before support finally drops. So maybe something like that. And then I would say we would grab this liquidity, maybe move down to this level. And just to go ahead and zoom out, why is that 24.8 level, lined out? Well, it's the top of the flat body candles from back in, or daily candles, I should say, from the 20th and the 21st. You could certainly move this up to, and there we go. You could certainly move this up to kind of, meet these local highs, but you have this really weird range right here. So I feel a little bit more comfortable with it down here because it coincides with a lot of price action down there. So you can kind of move this, you know, depending on what you consider staunch support, you know, 25 to 50, you know, 24.8, whatever. But I like to give myself a little bit of extra room, you know, just to see how things play out. Like, I don't want to immediately start buying at 25 to 50. I think that's silly, because I think that there's, you know, going to be a larger kind of demand zone around this entire area where price can very move around freely. You know, just because it has been grinding technically does not mean it needs to, you know, automatically respect that. Like, if you're talking about this range, like, this is a very nonsensical like area of price action. Obviously we ended up moving lower, but if you're trying to draw that out from like a range perspective, and things get very confusing, you know, and you've got this kind of, you know, this ugly like mid-range going on here without a lot of, you know, confluence and stuff. So what I always recommend is giving yourself a like, instead of a distinct line for support, give yourself a bit of a range, couple $100 range. That'll allow you to see weakness and strength, and attention from traders in that area. So, you know, if we do drop to the 24.8, I'm probably looking for longs here, but, you know, it'll be in a bit of a range here. I'm not just entering longs as soon as it tags 24.8, unless we do get a steep buyback. You know, maybe set some buy orders there, and see how the reaction goes for a quick cut. But better to play a little bit cautious just with how ugly this price action has been. So again, looking at Bitcoin above 26.5, I'm still sticking to longs, and this is the price action I'd want to see: 26.8, 27.1, and then, you know, 28, you know, 28.3, 28.4. And then if we lose 26.5, first look for 26.1, then look for 25.4, then look for something around 24.8. So that's what I'm looking for. And of course, the extremely tight range right here. No reason to really trade in one direction or the other. But, you know, that's certainly what I'm monitoring over the weekend. Ethereum, very similar in the, you know, in the grand scheme of things. Let's go ahead and zoom out just to kind of understand what that support looked like from the Bitcoin perspective. It's obviously a lot more tight, but this is really that critical kind of support level. And that's obviously why we have, you know, support drawn down for this deviation, this deviation, this deviation. And we're hoping that this may end up, this isn't, you know, I guess this kind of was a deviation because of this insane wick that followed, or insane candle body that followed. But I mean, if you just look at the current price action right now, I mean, it's basically just condensed and condensed. It looks like a top, you know, on its side. You've got, you know, this, and then you've got that. So, I mean, this is literally like, this is the ugliest symmetrical triangle. And typically symmetrical triangles break in the direction of the previous price action. So this was, you know, how it formed. So typically you would expect it to break lower, not 100%, but that's typically how you treat symmetrical triangles. So let's kind of zoom back out again, look at this hourly. And, you know, very similar to Bitcoin, although, you know, we don't have that 26.5 number in the sand. 1845 has been a pretty good support number. Some deviation here, got to, you know, try to get up there. A little bit of deviation here, failed again at the 1 hour estimator 200 moving average. Very similar to what Bitcoin did. We've got a lower high here. We've got an equal high here, but we do have a higher low and a higher low right here. So that's part of this symmetrical triangle formation, as well as you've got, you know, you've got lower highs, but you've got higher lows, which is, you know, very much an indecision type of formation, which obviously explains symmetrical triangle typically breaking in the direction of the way in which it was formed. So what I want to see is, you know, holding above 1845, very similar to Bitcoin. We need to get above this 1 hour estimator 200 moving average. So if that's a support, then we can start targeting these highs right here, which would be breaking out of that symmetrical triangle and getting to the top of the range. Now, if we confirm fail underneath the VWAP, which is currently what the situation is, although we are forming lower highs, which is what you would want to see, which implies that we may see another, you know, higher lows, which may mean we see another lower high following this formation. So if you are trading this, you know, what you would want to do is, you're seeing lower highs, but you're seeing higher lows. So you would trade this, you basically take this pattern right here, and you would trade, and let's get rid of some of these lines so you don't get confused. if you're just like a little scalping strategy, you're seeing these form. So if it gets above the VWAP long, at least up here on, with some leverage, then that's your little scalp. And then you would short back down to this level underneath the VWAP or at the VWAP. There is your scalp. So I have a feeling you'll actually see this play out in the next couple hours, but we'll have to see what kind of momentum it brings with it. Because if we get rejected right here and don't break above the 1 hour estimate between the moving average, then we're still just stuck in this ugly range. And unless you're a really good scalper, then you're going to start getting frustrated and maybe overextend yourself in terms of the trade. So what I want to see from the bulls, break above this level, flip this to support, get a chance to break above this and tag that. And then obviously try to get above to 1915 again, which has been pretty much the stalwarts that we've been dealing with all last week. And of course, into this week a little bit. So, remain cautious around 1915. I recommend, just based on previous price action. So, ETH isn't looking the sexiest. And if we look at ETH BTC, we did discuss this a couple of weeks, actually very early this week. I mentioned, this is the same thing talking about equities. Let's zoom out again. Equal highs. Typically, you're going to see people shorting them. Doesn't mean it will work, but people will typically start shorting this area. And crypto's obviously been a little bit weaker, so it makes a lot more sense why this, pooped out a little bit harder. But equal highs, and then they shorted back to it. And obviously, this trend line is now at risk of breaking. It did deviate once before, so it certainly could deviate yet again. But, definitely smart to maintain cautiousness if you think that Ethereum is going to outperform Bitcoin, because unless it gets back above this VWAP, it will not outperform Bitcoin. So that is very much something to be cautious of moving forward. Now, the last thing I want to mention, and again, anytime I mention another asset that I'm interested in trading, it does not mean you go ahead and long it immediately. That is not ever what I recommend. But on the 13th, which I'll go ahead and just draw a line in the sand for you guys. So the 13th is, we'll do morning of the 13th, because I would assume these documents will probably be released, mid to late morning Eastern time. And of course, I'm on the West Coast. So this is this white line is when the Hinman documents will be released for XRP. They're related to some internal SEC documentation that potentially, kind of puts the SEC in a position looking like they were, enacting the lawsuit for nefarious reasons rather than for the good of America. So we'll have to see what comes of that. But the Hinman documents are set to be released on the 13th. It's supposed to be a bullish indication for XRP. And, just based on this price action, I mean, if you just go ahead and look at any other coin over this past history, very few are on a very solid uptrend. I mean, let's just kind of let's just draw this trend right here. I mean, this is a strong uptrend, and I think this is something that should definitely be respected moving into the 13th, and something to take note of. Now, you could be shorting ADA or Matic because they're, being called securities by, the SEC in reference to the Coinbase and Binance and Robinhood stuff. But and those were good trades. I think those were obvious trades. But, what's a good trade in the long direction? Well, in my opinion, if you can get above, let's kind of draw a little bit of a early resistance level. So this is very much what you would consider like a short demand zone, because all we have are wicks in this area, and every time a wick is touched, it's sold off. So if you can get above the 54-cent level and hold this level, then I have a feeling you have a really good attempt to try and break the 547 level. So get above, 539, 54. And then finally crack above this 547, 548 level, then you've got a lot of room to roam. If we go ahead and zoom out, and I'll try and normalize this a little bit, make it a little bit clearer. I know I got a lot of lines, so let's go ahead and remove these trends. And remember, this line right here is the line for the Hinman document release. So although not the sexiest wick in the world, we do still have several hours left in the trading day. So if this can close up into this demand zone, this would make me really, really bullish. And if we still close above, let's zoom into the 4 hour, because the daily is not giving me the best indication. If we can close above these levels right here, above like 533 by the end of today, I'm probably may add more to my long. I'm sitting in a long right now from where is it? 5256. So where is 5256? This is my long, my current long, as I've been trading this thing the whole way up. But let's get 5256 right here. Okay. So this is where my long is. This is where current price action is. So, I told the trade, if you're not in the Trade the Chain community, I certainly told the Trade the Chain community about this last night. And actually, you know what? I'm just going to go ahead and pull it up because, I want everybody to see this and to know that, we always suggest really good trade opportunities in the TTC community. So here you go. Last night, 8:30 my time, focusing a lot on the XRP chart leading up to the Hinman document release on the 13th, scaling it along tonight and tomorrow. Ideally, XRP sees something like this. Woke up, I actually was up a lot more, before I posted this, but obviously, price action sold off a little bit this morning with some other crypto assets. But again, this is what I want to see. I want to see us hold above that 5.3 level. And then move higher. So let's go ahead and zoom back into the 1 hour. And you'll see that, we're sitting right at the support level that I want us to hold. And we obviously got rejected at the demand area that I want us to break into. So, if we can, rotate back up this way, that's exactly what I want to see. And I have a feeling that if we can break above this, we can break above that, and then we can continue moving higher towards the 13th. So this is one of my favorite trades from a long perspective, and from a short perspective. I'd recommend looking at the assets that are, attacked by the SEC. Those are probably your easiest shorts. Everything else, unless there is a narrative, meaning bearish because the SEC is attacking them, bullish because of potential positive news surrounding SEC lawsuits. If you're not trading in that perspective for crypto right now, then you're just, I think, inducing more pain on yourself. There hasn't been a whole lot of volatility, but there is if you're looking closely enough. So with that being said, that's it for today. We will obviously see everybody on Monday for the Trading Rebellion show and continue with our litany of media shows throughout the week. So good luck, happy trading, and we wish everybody the best of luck over the weekend. Fingers crossed, BTC and ETH hold that 26.5 and 18.45 support, and fingers crossed the the XRP trade works in the direction that we want it to. So good luck, happy trading. See everybody soon.